Hello, I am delighted to welcome you back for this new edition of the Bourdieu Monday Report. News regarding the conflict in the Middle East remains for now the key variable for the direction of financial markets. Last week, hopes for de-escalation revived investor risk appetite, allowing the prices of most assets to rebound strongly. As a result, stocks rose 4.5% in the United States and are at an all-time high. They are also up by more than 3% in emerging markets and nearly 2% in Europe and Switzerland. Interest rates are falling, allowing bond prices to post positive performances of around plus 0.7% in both US dollars and euros. The dollar index depreciated by 0.6% and, along with falling interest rates, helped gold prices rise by 1.8%. This weekend's disappointments on the negotiation front have somewhat tempered the optimism that had probably become a bit excessive. Oil prices are back up by more than 6% and stocks opened down 1% in Europe. More generally, volatility should remain rather high, in line with the evolving situation in the Middle East. On the economic front, we are starting to see some positive surprises coming out of China. The 5% year-on-year GDP growth of the world's second-largest economy surprised to the upside in the first quarter. This growth is also accompanied by a very satisfying rise in industrial production, as can be seen on the chart on the left. On the other hand, as seen on the right-hand chart, Chinese consumers remain somewhat cautious, with retail sales struggling to accelerate. Nevertheless, the recovery in household morale over recent months bodes well for a greater contribution from consumption to economic growth in the near future. This week in the US, we will see the release of the Purchasing Managers' Index, the PMIs, for the manufacturing and services sectors for April, as well as retail sales for March. In the Eurozone, we will have, as in the US, the manufacturing and services PMIs plus household confidence for the month of April. At the microeconomic level, we have raised our price target for Siemens stock. The announcement that the long-awaited spin-off of Siemens Healthineers will be proposed at the next annual general meeting early next year is a catalyst that should help reduce the group's conglomerate discount. This good news adds to the more constructive cyclical signals coming, as we have seen, notably from China and in the shorter term, obviously, from a resolution of the conflict in Iran. That is all for today. Thank you for your attention, and I will see you next week.